And there's Google. I'm just doing this just to make a point here. What is the current date and time? All right. It's 4:23 p.m. It's Sunday afternoon, February 26, 2017. I'm in Chatsworth, Los Angeles, and if you look here down at the bottom right-hand side, you can see that that's coinciding with my computer's time clock. Okay, so that's just a way for you to know that I'm playing honest and see if what I've done and what I'm doing is consistent, right? Because I can't fake, I can't hide behind live. Okay, and there's no better way to prove anything than do it live in real time. We're going to be going higher here. So you see this area here, I'm going to highlight this real fast. That level in the market, we're going to be breaking that. We're going to be moving higher here. How do I know that? How do I know that this is not a top? How valuable is it for you to know that the market's actually producing a false top, a false signal? Right? Think about that. If we can eliminate the low quality, low probability opportunities, the ones that are going to struggle and eventually fail, if we had a way to measure and value that objectively, consistently, reliably, right? Then by definition, we should be able to actually filter out the opportunities that are likely to struggle and fail before we commit and get stuck, thereby avoiding the stress because we're no longer guessing and hoping. And that's how we don't engage the market and gamble on outcomes. So the market does not have to be a gamble in this big risky place. It's really a lack of information, lack of understanding what makes the market move here. So we're going to be moving higher. How much higher can we expect to go? Price is going to be moving into that zone. Now that doesn't have to take all that time, by the way. That's not the point of this. And that's not what I'm trying to do right now, although there's an aspect in which we could do that as well. It just takes a little more time. I don't want to do that. But the point is we're going to be moving up in this area, okay? You might see the market sitting there and holding that resistance level. So that to you might seem like an area where the market is topping. So let's say if you wanted to go short, let's say you put your stop loss right over here above this high. So let me highlight that. So let's go up by a little bit and just say we're going to put our stop loss right above that high. All right, and so if you've heard the market's manipulated, you've heard the market's rigged. Here's a way not to be a victim of that. By understanding that this exists, then that means you should take that into account. Shouldn't that be part of your game plan so that you're not victimized by that? So this is critical. Let's just go ahead and mark this for you. Now, again, I'm trying to demonstrate something, but I want to make an example here. This area that I just drew a box in represents where I'm willing to enter the market in from as long as the market crosses into this area here, and I'm getting triggered right now, literally. Now the same distance, okay, watch this. Let me copy and paste that so I have a duplicate copy of this box, okay? I'm going to take that and move that forward. I'm going to move that over this way here. Now notice how that same distance where that blue line is essentially my one-to-one. I want to have a minimum of a one-to-one risk reward. I never want to risk more than what I'm able to make. So here's just a real-time example. If I'm wrong, I'd want to exit right here, okay? So if the market moves down lower and hits this area, that's where I'd want to exit. That's my stop loss. And at size no larger than 2 to a maximum of 3% of my entire investment capital, that's my maximum risk. All I can lose is 2 to 3% depending on how much I size my position for, and if there's any little slippage that occurs, I don't have to take these large inappropriate risks of 10, 15, 20, or 30%. Nothing that's going to be detrimental, traumatic to me, okay? But this is important for you to see. So first of all, by the way, if you had gone short, remember this turquoise line here? Remember this area here? All right, let me just kind of remind you this area right here. I told you that if you were taking a short, that this is going to be a false top, you would have been stopped out right now, okay? How valuable is it to know where the market is going to go? How valuable is it to know where the market is not going? Okay, so I just told you where the market's not going to go lower right now during the time that we're together. It's going to be moving higher. We've reached at least a minimum of a 1-to-1. You would have had a confident experience. Didn't worry about and stress over this little retrace that occurred over here in this area here, because your data was telling you that the odds of it coming and hitting your stop loss were very low to unlikely, so that wasn't a stress-filled event, and so that's really important, right? Confidence. You want to be confident. So by now we would have had a 2% profit. In the market, we let the market work for us. We let it come to us. We don't sit there chasing the market, chasing money, chasing moves. That's actually counterproductive. And notice, by the way, when we started and when we look like we're about to wrap up, right? What is the current? So now it's 5:23. And again, you just look at my time clock here. I'm doing that, being a little bit silly about it, just so that you're realizing there's no trickery here. It's 5:23. But think about what we're doing here. We're shifting our focus. We're not looking for opportunities to make money. Instead, we're focusing on opportunities that are not likely to lose us money. Everything will look different from that perspective. So you are never simply trading moves. You're never just trading opportunity for money. You are always trading the odds, whether you're aware of it or not. Guys, hope is not a strategy. Probability analysis is.